Good afternoon, good evening, folks. This is Brian Mitchell, day trader at Trade Algo. Welcome back. I'm the fellow or gentleman that hosts the live sessions Day Trade with Brian all day long. Today is Monday the 24th. We only had one trade today that actually gave us a little 15, maybe 20% return on DK and G calls. I did go over. I did go over that in the live stream. If you want to watch the replay here in the live stream, once you go to live sessions, Day Trade with Brian, yours truly was very, very picky with trades today. So I wanted to do a recap video. Hopefully you guys had a great day in the market. I was a little bit patient in the market due to the news that I think dumped the market. Let me see if I can find it. Worries of COVID. Let's see if I can find news articles. Worries of new pandemic. I saw it on X, and it's not going to give me any news articles, but there was basically on Twitter, on X, which is my news site. You guys can use whatever you guys want to use. I think that's what's caused a dump in the market, ladies and gentlemen, because we had our biggest drop in all of 2025. So we've had bigger drops like this before. We had a pretty massive one over here, but this one was the biggest red candle in a single day we've experienced all of this year. So I wanted to go over what I'm looking at, what I was looking at today, and what I can potentially expect moving forward. So I was a little careful on making trades today because typically after we have a big red candle like this, one of two things can happen. A, continuation in the market because the relative weakness carries over from the previous day, or a massive retracement like we had here. So see, we have red candle and then green, green, red candle, green, 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 red candle, green, 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 green. We might get a little bit of green tomorrow. So I'm going to be very careful with moving forward because you don't want to trade in relative weakness, ladies and gentlemen. Let me open up the Technical Analysis Bible, which is in my guidelines. I should probably post these in the chat one more time. 1 second. I post this document over and over and over again. Not too much to bother the members that already know it exists, and not too little so that the new folks, they're just like, I didn't know this existed. So I usually post this disclaimer as well. If you're new to this chat, to find trades in this chat, it's worthwhile to understand how this chat room works. And this 20-page document, it's not as daunting as you might think, will give you the biggest boost in getting you acclimated as possible. It says, please do not ignore this document. So on page 1, section C of this document, where it says the Technical Analysis Bible, I do read this document every single day. Relative weakness. I've memorized all these rules of technical analysis of buying calls at support, puts at resistance. That should be pretty basic, right? The more we test the resistance, the more likely we are to break it. So say, for instance, I'm just going to give an example before we get right back into the relative weakness part. Typically, in technical analysis, guys, if we have, say, a 4-hour resistance here, and this is a 1-hour time frame down here of higher highs, higher lows, higher highs, higher lows, higher highs, we're not going to break through on the first test. This is test number 1, right? And we typically retrace somewhat, maybe the higher low we had here, then we, on a lower time frame, higher highs, higher lows, then we get somewhat of a rejection, form a higher low on the 1-hour time frame, and we usually break on test, not 2, but usually 3 to 6 is what it says here in this document. So it really helps to read this every single day, like I said, in this document. I personally read this every day because you want to sharpen your blade before you go cutting wood. I know sometimes I'm excited to make money. I'm going to chop down a lot of trees, but if you are chopping trees with a dull blade and you're not sharpening the blade of your mind, you're gonna have more frustration than necessary, which I don't want for each and every one of you, right? So what happens when these rules are broken? I'm just showing one simple example of, say, for instance, we break through on test number 1 and not test 3 like this. 1, 2, 3, 1, 2, 3. Typically, if we break through on test number 1, higher highs, higher lows, boom, and then get a candle close on our first test, that would mean this rule of technical analysis is not working because we could typically break through on test 3 to 6. What happens when one or a couple, sometimes even 3 rules of technical analysis are broken? We have to go to rule 4. So our job as traders to understand if a market is neutral, that's where every other rule in this document is working like a well-oiled machine. But if rule 2 is being broken, we're breaking through on our first test, not test 3, 4, 5, or 6, that must mean we are in relative strength. There must be some euphoria, some optimism, some good news getting traders, investors excited about whatever the company is, maybe the entire market. We saw that when Trump got elected. The whole market just rocket shipped up. Bitcoin went up like, like 30,000 in like less than a week. So euphoria will just blow through all of your resistances like a hot knife through butter. But the same is true for the opposite side. Fear, panic, bad news. And we had bad news on Friday that there's a potential pandemic. And sometimes that fear carries over the weekend, right? Or the next day. It could carry into tomorrow as well. And so I have to be diligent in saying, okay, in an uptrend, is support being respected as it should be? Is the trend my friend? Which rules are being broken, guys? Like, you have to understand how, here's another one. Once gaps fill, because a lot of people like playing gaps, price usually reverses unless there's relative strength or weakness. So if I see a gap that fills and it's not reversing, say for instance, here's the gap fill, lower lows, lower highs, lower lows, lower highs, maybe a little bit of consolidation moving sideways, lower lows, lower highs, and then the gap fills, we should bounce up. But if we keep dumping, that must mean relative weakness, right? My rules of technicals are failing because it's not reversing. So it really is worthwhile to understand. It takes about 2-3 minutes to get through this every single morning, and you can skip over some things, right? But a lot of questions are answered in this document. Choosing strike prices, how to choose strikes and expiration dates. If you're trading options and you want to make trades on your own, what time frame are you looking at? Should you be putting this week's expiration date? Maybe the 15-minute, 1-hour time frames are good for you. Maybe 4-hour, right? But the bigger the time frame, so reading this document really helps. So SPY. I gave a very tiny hero or zero trade right here. This was a resistance here, boink, boink, boink. So then when we came here, we closed above it, and then we should have retested this and went up, and we blew right through it. So relative weakness in the market, and this is a daily time frame. I'm drawing an arrow to the time frame we're currently on, which is D for daily. So typically, when something breaks through that quickly on the daily, that's no bueno, ladies and gentlemen. The bigger the time frame on the charts, usually the more respected or reliable my support should be. My supplies, my demands, my simple moving averages, every indicator you use is better on the daily than the 4-hour. On the 4-hour than the hour time frame. So when we just blew right through, I thought, yeah, it's probably that Monday we're gonna go lower, because that's not natural. That was either manufactured, or it could have been some genuine fear that we had another pandemic around the corner, because they said, oh, Wuhan lab and blah, blah, blah. I don't even know if that's the news that caused that. It could be profit taking since we were at all-time highs. It could be a mixture of both, right? But that's also a reason why I don't trade news. A lot of people say, hey, this company came out with news. That will water down my technicals, because what does news do? It usually pushes us into fear or pushes us into euphoria. If you're a momentum or continuation trader, then yeah, news is awesome. But for me, I mean, my rule one is I buy calls at support, I buy puts at resistance. News can throw my number one rule out the window, so I'm not a news guy, for those of you guys that didn't know. So SPY, we did get a little bit of continuation after I took the line off my charts, but it was that support no longer exists because we get a candle close below it. So now we are pretty much in a downtrend, unfortunately. Lower lows. I'm looking for a lower high, hopefully, before we come here and then bounce. What is this kind of sloping trend line that I have here? Let me show it to you. So this one started October 27th. is the bottom of that red candle, and then I actually had it connected to here, but once we had a candle close below and then we went back above the line, I had to readjust the line. So I connected it to this one right here, this green candle on January 13th, and it is a possibility that we bounce here at around 594, and tomorrow's candle, it'll probably be, yeah, about 595-ish. Keep in mind the daily time frame. We do have the 100 simple moving average right below. So sometimes when we have supports that close to each other, what the market movers like doing is saying, yeah, that support's not going to hold. This one's not going to hold either. Psych! And then they'll just throw traders off. What they really want to do is grab both of them, but scare people enough to make them think that neither one of them are hold. But you're actually looking at the daily time frame, folks. So we can kind of dance below both those supports before we go up. And on the daily time frame, it'll look like this. That shadow is what really, or that wick is really what throws people off. In retrospect, in hindsight. So I think we could go as low. 590 is a stretch. I think we could go as low as maybe 593, 592 tomorrow if, the key word is if, the continuation happens. But I do expect us to kind of retrace a little bit because downtrends are lower lows, lower lows and lower highs. Lower lows and lower highs. And then once we break through the lower high and we get a higher high, we don't just go straight up like most beginners think. We do a higher low as well, then a higher high, then a higher low, etc., right? So I'm eyeing. I don't know for 100% for sure if this sloping trend line is going to hold, but I'm looking really only at daily, weekly, and monthly time frames in this kind of crazy drop. Remember, the bigger the time frame, the more respected and reliable everything's going to be on your charts. So we can clearly see here that we had a 4-hour support. I color code all my lines. And we blew through that 4-hour support like a hot knife through butter today. It's this orange line you see right here that we previously bounced off, bounced and reclaimed. We even reclaimed this one right here. But we just blew through it today, and we went back above it, but then we got violently shoved below it again. So if 4-hour is not working, guys, you have to look at the next biggest time frame because the bigger the time frame, the more respected things are. And sometimes we don't trade that day, right? If you cannot rely on your technicals because the relative weakness or maybe relative strength is going to water down your technicals, you have to either use bigger time frames. But what if the bigger time frames don't hit, Brian? Well, you just gotta wait, right? What if we never get that sloping trend line? We start moving up. That's okay. Then no trade for me. If I missed it by 10 cents, 13 cents, sometimes I miss it by a single penny, which is upsetting, but it's just part of the game, right, guys? So 595-ish, hopefully, if we do go lower, or 593-ish, like I said, we might, since there's two kind of supports on the daily time frame, and then we'll probably try to come up, and we'll probably, if we go that low, we'll probably use today's low as resistance, 596.50. So that is the S&P 500 SPY. It is temporarily bearish. We are no longer in an uptrend. So I want to show you where the trend is broken before I move to Qs. Higher highs, higher lows, higher highs. Did we break through that higher low over here? Yes, we did. Lower lows. That's why I'm thinking we might get a lower high, but it might be short-lived. And we might do something like this before the bounce, if not tomorrow, on Wednesday, maybe even Thursday, right? I don't try to predict the market. I react to the market by buying calls at support, buying puts at resistance, minding my environment, and if it's relatively weak or strong, increase the time frame and use the higher time frames. Hopefully I'm not going too fast and this is making sense. You might be want to be taking notes. And I'm going to try to do these more often because really, trading is a skill like any other. And how do you get better at skills? It's repetition. The way you remember information is strong emotions and or repetition. So if I can maybe just kind of word vomit over you guys and you guys learn by osmosis from all the repetition, I think it might be worthwhile. So that is SPY and what I am looking at. Qs, probably same thing. I haven't looked at them yet. Before I move to Qs, This is in relation to SPY and the Q. You know what? I'll do Qs. I'm sorry. I'm getting all over the places. I should have had maybe a planned schedule here. So Qs, I'm looking at the weekly time frame, and very similar to the daily sloping trend line we had for SPY, the same one exists for a QQQ, which is the Nasdaq, right? Which is more tech heavy, right? If you Google what is QQQ made up of, it's going to tell you the top stocks that QQQ is composed of. SPY, it's Apple, Microsoft, and Nvidia, right? No, I know it's Apple and Microsoft are the top two, and I think Nvidia is a close third. Here we go. That's not what I want. I should probably go over this at least once a week. What are QQQ made up of? What stocks? Here we go. Holdings. That's the one I want. So QQQ is made up of 9% Apple, Microsoft, and Nvidia. So slightly larger than SPY. For SPY, it's about 6.5, 7. It kind of fluctuates. Microsoft usually close second to Apple. So Apple is usually a leading indicator for both QQQ and SPY. Same with Microsoft. So I'm going to show you something on SPY and Microsoft so that you understand, why the ETFs might be moving the way they're moving. So same thing with QQQ. We have a sloping trend line, but instead on the daily, on the weekly. Drew here at the bottom of August last year, and then connected this dot right here. You can see it bounced here, and then we bounced there again. And now, even though we're a little bit below it, I think we're going to go back up to reclaim that line because we've been holding this pretty nicely. And again, I know it sounds like a broken record, but repetition is good for all of us. The bigger the time frame on the charts, the more respected and reliable everything's going to be. So that is looking nice. I think this is just a liquidity grab to the downside. Hopefully the fear doesn't carry on too many days. And the big money will be like, we're going to keep that weekly trend line alive, just like SPY, right? The one compelling, so let me show you what it looks like on the lower time frame. We're pretty much sitting our tushy right on it, right? So that's why I might expect a green day tomorrow, like I was saying in SPY, because QQQ and SPY usually move in tandem. It's just that QQQ moves faster than SPY because the allocation into Apple, Microsoft, and Nvidia are slightly larger by 2 or 3 percentage points in this ETF than S&P 500. So even if we do go a little bit lower, I think we'll go to as low as 517 and then bounce up and then reclaim that sloping trend line. And then after we spook people out and get a nasty liquidity grab, start moving back upwards again. But it's a big we'll see. Again, we're not here to predict the market. We are here to react to the market, guys. So that's when you start moving out of beginner land and you move into intermediate land when you really start understanding that concept of, we're here to react to the market. Let's see what the market does and then reassess when we get there and see if it follows our plan. So interesting, Apple had news that this administration was able to reel them back into the United States. So Apple is going to have production back in the U.S. and an allocation of, I think I saw $500 billion back into the U.S. So like or hate the guy, that we're here to make money, guys, but it's worthwhile noting that the president is making moves, albeit some to not people's liking. That main goal is to how do we get everyone prosperous is like the main bottom line, right? So bringing back manufacturing, bringing back car production, bringing back things to the U.S. to make this country, because we're playing this country's companies' stocks, is going to be overall good, but it's going to take a while for those things to take effect. But I think that's why we've had an uptrend in Apple. So you guys can clearly see it. I already drew it out for you. Higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So it might be worthwhile that as soon as, say, we get to 245, that's going to be bought up really quick so that uptrend could be maintained, right? As long as this higher low is held, 245.65-ish, Apple's looking good, and that's likely. This is why it's showing relative strength. See how the rest of the market right here, look at my mouse on the right-hand side, is red, 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 red. pretty much everything is red except Apple, because Apple is relatively strong compared to the overall market because of the good news. That optimism is keeping that 1 hour trend line alive. And keep in mind, like we just showed, what's the biggest holding in the QQQ and SPY? It's both of them is Apple. Both of them. Right? So I think that's why we're not completely sinking and falling off the Titanic completely. Apple is really, really kind of holding the line for both ETFs. However, the next one in line that is the biggest holding is Microsoft. Let's take a look at what happened with Microsoft today. Kind of the opposite, which is bizarre. So I think these two canceled each other out. If I look at the daily time frame, we are barely holding a daily demand zone, guys. Barely holding the sucker. So you can see here that we had a very aggressive pump here. I've showed this in previous videos, and then we got a red candle up here. Clearly broke through the lower lows and lower highs. So we draw from the opposite color candle, base to wick, bounce, and as long as we don't close below 40170-ish, this thing looks like it wants to shoot up higher. So this, again, just looks like a liquidity grab, but if the market makers really, really wanted to, they could have just pushed us a few cents lower to invalidate this demand zone by just giving us a candle close below this line, because that would invalidate the demand zone after it was created, right? But they were careful not to do that. They kind of spooked some people out in the beginning, and then they reclaimed it, and this is where this decided, because it's really them that control the market, they decided to keep it inside this demand zone. So Microsoft is still respecting technicals. Despite the big red candles, it's not completely relatively weak. All right, guys? So you guys can see that there was a lot of analysis, a lot of moving parts, and that's that's enough. There's pretty much a lot of trading is a juggling act, which is kind of like sometimes you're juggling 5 balls, sometimes you're juggling 8 balls. I don't know what his deal is. Sorry about that, guys. So Apple, relatively strong. Microsoft, slightly relatively weak, but still holding technicals. Just the lower time frames got thrashed. But daily still holding, that's a good sign. That is a good sign. And lastly, I'll get into Bitcoin since this video is getting a little bit long and verbose. Apologies. I know I want them short and sweet. Let's look at the weekly time frame. We have a higher low that we are trying to protect here. See how these 2 weeks right here and then a sharp pump upwards. This is a support that's held 1, 2, 3, 4, 5, 6 times. This is what's worrisome. We still have the rest of the week to get back above 93,730. So this is what makes me a little bit nervous about Bitcoin. Let's go back to Rule 2 of our Technical Analysis Bible, and everyone has access to this. I already showed you guys where you can get it. Just go to the chat, go to page 1, section C. Hopefully you guys are taking notes. The more we test a support, the more likely we are to break it. We typically break through on test 3 to 6. What test are we on? We are on test 1, 2, 3, 4, 5, 6. We might lose that support on 93,730. And if we do, we still have until pretty much next Sunday, or this Sunday, depending on how you calculate your week, if Sunday is your first day of the week or if it's your last day of the week. So we can liquidity grab and then maybe get back above that. So that's what I'm looking at the weekly. We have no weekly supports other than that one, which is why we've tried to hold it for so long. If we lose that one, that's not going to be good. That means that if we close anywhere under 93,730, we're going to come back to grab the liquidity to the upside before coming down to as low as probably the 200 simple moving average on the daily time frame, which is around 83,000, and that would be no bueno, right? 82, 83,000. It's just not looking good. So again, I don't predict the market. I react to it. So I'm waiting on the weekly close just like everyone else, guys. But we were ranging for pretty much, this is the daily time frame, we were ranging for a long time, and it's actually one of my rules of technical analysis. We were in this blue box for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, almost 3 weeks, guys. Just pure barcoding. Looks exactly like a barcode. And what happens the longer we range? I could have sworn that was a rule somewhere. The longer we range, the harder we break up or down. Did we break to the downside pretty bad? Yeah. So the bottom of the range is here around 95,000. Even if we make higher highs and higher lows pretty slowly, I do expect somewhat of a rejection at the bottom of this range, because now that is resistance. It was support for a very long time, but now this candle close makes it resistance. So keep that on your charts, guys. 95,300 is going to be a heavy resistance that I don't know how you guys are going to use that, whether you guys do crypto trading on your own, but I say it in relation to all these stocks, because we're here to discuss stocks. Trade Algo focuses on equities, not other, other types of money. So for Riot, Mara, Coin, MSTR, MSTX, once we get to 95,300, or really 95,000, let's call it 95,200. It's going to be a pretty nasty dump from there. So this one is not looking pretty, unfortunately. We should get a bounce somewhere in the neighborhood of 89,830. But other than that, guys, this looks bleak. It seems that that massive crypto run we had since the November election right here, this complete euphoria that we were in for a few weeks, it's slowly dissolving. Because we went from 69,000 to 100,000 pretty darn quick, right? So bulls are really trying, but I think this is not natural, guys. This is it looks like a manipulated dump to me, because bulls really held the line way more than 3 to 6 times. Remember, we usually break through way earlier than that. The more we test the support, the more likely we are to break it. It doesn't say test 19 or 20 here. It says test 3 to 6. So bulls, the folks bullish on the market on Bitcoin and crypto, really try to hold the line, and the market makers just shove something down our throats that was just it was vicious, honestly. Hopefully you guys didn't lose too much money, but it's important to know your environment, guys. So a lot of people try trading every single day, which that's like having a McLaren or a Lamborghini that can go 200 miles per hour, but if you're in bumper-to-bumper traffic, there's no point in stepping on the gas, right? You just have to wait it out until there is a clearer, more open road to be able to use that skill, right? I kind of equate skill in the market and your ability to maneuver it kind of like driving and your ability to maneuver traffic. If it's slow traffic, there's no point in getting in a car accident by going fast. Just, it is what it is. Right, guys? So that's it for me. If you guys have further questions, technical analysis related, my email, let me post it in here so that everybody knows. This is not a chat for customer service, but if you guys have customer service questions and you email me that, I'm going to forward it to customer service. I am more of the analyst type of questions that I can answer for you guys. All right? That's it for me, ladies and gentlemen. I'm going to really try to make these videos a little bit shorter, but when we have massive reactions in the market like this, they get a little bit extended more than I'd like to, because more analysis needs to go into it. So more moving parts, in other words, more balls in the juggling act, right? All right, folks, I will see you guys tomorrow bright and early when the market opens in here. Hopefully you guys will join me and participate. Have a wonderful and blessed evening, and I'll see you guys in the next one. Everyone, take care.